Now in this video, I'll be talking about the trend lines have to break down from the rising wedge patterns, but these other trend lines, recent lows that have to really be broken in order to get a fall. And here it is on the Dow right here. But I'll be talking about these trend lines in the video. I do want to point out, though, that we did get a reversal of conditions today with the sell-off that we had. We had the MACDs in the daily time frame roll back over, so we're completing these divergences again. So now we need to do technical damage, taking out these 20-period moving averages and staying below them, which again we've found support at the Dow and the S&P 500. Nasdaq's just below the 20-period, but we did close below the 10, and we did get the cloud turning to red here. A little red arrow there. You see that's because we closed below the cloud. So we'll be watching, do we fill the gap? And if we fill the gap, do we stop making new highs? So we'll be watching that. Do we get any more green here? Do we just start getting red and going into negative territory? The MACD is going negative, and the stochastic did roll over today with the gap lower. Dow, same look here on the Nasdaq. Again, we've had these other reversal of conditions, but so far it's just been a sideways correction, no trend reversal. But you did get it here today on the Nasdaq as well. But other signals I have are still bullish. We need to see more signals turn bearish and break the trend lines, the trend lines from the recent lows, which we're trying to bounce off of on the Dow, the Nasdaq, and the S&P 500. Here is the S&P 500. Again, it's turned red. The last time it turned red, we went sideways. So again, we've got to see the oscillator and the MACD eventually go negative, and we've got to see this reversal of conditions dropping below the 20-period moving average if we're going to see a breakdown. Again, I'll be talking about the trend lines from these recent lows that have been finding support at the 20-period. You watch the video all the way through, but we did get a reversal of conditions today. We'll see if it remains that way. As long as we reversal of conditions, we could go lower. If we hold below that 10-period moving average, if you go get back above it, the cloud directly overhead, and the gap fill area. So we'll be watching to see what happens tomorrow with Powell speaking during the market session. Again, do these things remain bearish and start going negative here, remain red and with the rollover here start going negative, or do we buy a little bit more time off the 20-period moving average? But we did get bearish reversal of conditions today on the daily charts. In reverse, we eventually have to see it in the weekly time frame on the S&P, dropping below the 10-week moving average, starting to get red here. We don't have yet. We'll see if we have it by the end of the week or not. Now, while the S&P did get a reversal of conditions, it did not take out the green dots of support. Tried to, but it was not successful. And it did get doji with a bottoming tail at the 20-period moving average. So we'll be watching the gap. Nasdaq got a hollow red candlestick. I have it red here reflecting the trend, but it was a hollow red candlestick that had a bottoming tail in the form of a hammer. But below the 20-period moving average, still below the cloud, you did get a bearish reversal of conditions. So we'll be watching the gap fill up here with our doji candlestick or spinning top looking candlestick there. We'll be watching these gaps. And on Nasdaq, it has had these bearish reversal of conditions, but it has only produced sideways moves so far. We'll be watching this one to see if it is different, and we'll have other indicators that have not turned bearish yet. We'll be watching to see what becomes of this signal here. Does it mean we're going sideways? Does it mean going back, or does it mean we're starting a reversal? The divergences are playing out, but doing the same thing the S&P is doing, getting a bottoming tail at the green dots of support, getting a bearish reversal of conditions, gapping lower. So we'll be watching what becomes of these gaps at Powell speaking tomorrow. Now, we got a bearish reversal of conditions. We're trying to break the rising wedge on the S&P. We need a confirmation of follow through, but if we go back and fill the gap, again, may buy the market more time. If we're going to sell off, we need to take out critical mass right here and have it turn red and remain below it. So again, right here, we're at critical mass, which has acted as support. If we're to reverse, that level would have to be taken out. S&P daily chart here. Other things have to happen here on the S&P. We'd have to take out the rainbow cloud, which we're right at the lower end of the rainbow cloud right now. We'd have to take out the green line, which is right there, a little hard to see because it's green with the rainbow cloud. Would have to turn to red, and then we'd have to see the way the swing trend line turned to red, but the momentum line turned red. Neither one has changed yet. And then that would need to be validated with the balance of power going negative. Daily chart of the S&P. So just some signals that I'm watching. They should turn bearish. Get a bearish reversal of conditions, so they might. But the S&P got a doji today, which is a candle of indecision. So I'm watching to see if some of my other signals turn back to bearish now that we're trying to get a reversal of conditions in the daily time frame. My other indicators are still bullish at this point. Divergences look to be completing here. Watching to see what happens with today's gap. S&P daily here. Critical mass line in the critical mass cloud has been acting as support for the S&P. Again, if we begin to take it out, we start seeing signals, more signals turn bearish, momentum start turning bearish, then we're likely starting a reversal. But we clearly have negative divergences, and again, tells us that the institutions have been selling into the rally. So again, we'll be watching to see if these divergences begin to play out. I need to see more signals turn if we're going to validate a bearish reversal of conditions with some of my other indicators. And again, we'll need to see indicators move from the positive region into the negative region. Just wanted to show you some of my indicators. I'm watching them closely to see if they turn this week now that we're getting a bearish reversal of conditions. It becomes of today's gap. We fill it now or later, and if we do fill it now, do we stop making new highs? Market rally or sell off with Powell tomorrow? Please consider supporting the channel with the link below. It allows me to be able to provide you with this information. If you follow the link, it'll take you to a secured site. You can donate any amount you want. I don't have any sponsors, just a direct relationship with you. So please consider helping out today. You need your help at this time. We saw the sell-off continue. I talked about the surge that we had with the 10-year Treasury note yield and with the dollar based on the PCE data last Friday and Powell's comments that there's no rush to cut rates. Well, we saw the continue before the market opened. We saw the 10-year Treasury note yield begin to show strength. Once again, gapping higher. It did form a little topping tail, but it did break above overhead resistance. It's already broken the downtrend. It's broken out of the bull flag here. Bull flag, it broke out and back tested, broke the downtrend and back tested. And I told you if we clear this level of resistance, you should see the stock market go lower and reverse. And with that, the S&P broke the trend line here, but we got a doji. And as you know, you've got to break the trend line. You've got to get a confirmation and a follow through. I keep talking about this. Breaks of the trend line before, but there was no confirmation and follow through. See that happen. So we'll be watching the gap. With this surge and gap higher on the 10-year, we saw the S&P gap lower. So we'll be watching that gap because tomorrow we're going to have Powell speaking, and that will be during the market session, and it will be at 12:10 p.m. Eastern Time, and he'll be talking about the economic outlook. So again, at our recent last FOMC meeting, it rallied with Powell, and then it's selling off on Powell from last Friday when the stock market was closed based on his comments about no rush to raise rates. And we're getting all these Fed speakers now, and again, they're all starting to echo that message. The economy's strong. Inflation's ticking it back up. There's no need to rush to cut rates. And again, you over and over again, that June cut, that when the first cut is supposed to take place, is eventually, in my opinion, going to get canceled. Could see that here. The stock market to begin to sell off. We'll get the CPI data next week, and I think that good chance that over the next few weeks we begin to see that June cut canceled and the stock market to turn. The economy is strong and inflation high. There's no need for the Fed to cut rates. If the economy starts to weaken and the Fed starts cutting rates, the market's going to sell off anyways because it's going to begin to price in recession. The Fed will be cutting because the economy is weakening and recession is coming. That's why I believe that we're in a topping up process right now. So, Powell will be speaking tomorrow, 12:10 Eastern Time, on the economic outlook, and I'm sure it's going to be a market mover tomorrow. A boatload of Fed speakers this week, and in addition to Powell, again, you've got all these speakers over the next few days, and we've already had some this week, and we had some last week. I told you they're all going to start echoing what Waller said last week. Both Fed Governor Waller and Fed Chair Powell both said the same thing. no rush to cut rates. And again, that's the message out of the Fed now because of sticky inflation, which is correct, which is what we've seen with the CPI data. And again, well, we got the PCE data, headline number ticking up on a year-over-year basis. Again, the core showing that inflation is sticky. Now, you got Mester and Daly out there today. Again, bunch of Fed speakers this week saying the same thing, echoing the same thing, saying they expect 3 cuts. Message is the same. There's no rush cut rates. Fed President Daly worded it that there's no urgency for the Fed to cut rates. Again, they're telegraphing the same message heard from Waller and Powell last week. More Fed speakers, and again, what the market does with Powell. And again, maybe Powell comes out with the same message. The market rallies up anyways. We've seen Powell try to come off hawkish before, and the market ignored it. Times like from what he said on Friday, market responds. So we'll see what happens. But again, we do have a gap to be watching now. Tomorrow we're going to get more speakers, and we're going to get Powell during the market session, and then we're going to get the private payrolls ADP to come in 155,000, previously 140,000. A boatload of speakers on Thursday, and then Friday we're going to get the jobs report, which is expected to come in at 200,000, previously at 275,000. The unemployment rate is supposed to tick down at 3.8%. And don't forget next week, and then we'll have, again, more Fed speakers get in just over a week here, getting that CPI data, and be watching that as it has come in hot for the last 2 months. It's the same day that we're going to get the FOMC minutes. So we'll be watching that. And the very next morning, we'll be getting the producer price index, which is wholesale inflation. So we'll be watching, do we rally back up? And then we'll be watching the highs. Do the highs hold? We break down further. We got a candle of indecision today on the S&P 500 in the form of a doji. A continuation down, or could be a short-term bottom. We'll be watching to see which way it plays out. I'll be watching the topping tail here. Does it push us back to fill the gap and come back in here, and then we go higher? I'll be watching the 10-year, or do we just hold above this level and not fill the gap? We'll be watching that, but we did get a doji. So if we come back down with the 10-year, we could see the S&P try to fill the gap. But again, we did break through this level of resistance, but we gapped higher. So now we need to be watching, well, does the gap fill? And we also broke the downtrend. I told you we broke that downtrend and we back tested it. And then now we're breaking overhead resistance. Why is this important? Because the 10-year tends to have a negative correlation with the market, and we're breaking a downtrend, suggesting that the S&P could reverse. Now the yields move opposite to the treasuries, and look at the 20-year Treasury bond fund, TLT. It is diverging with the S&P 500. S&P's moved higher, and it has not. It also has some gaps. So again, we'll be watching the gap here on the S&P, but divergence is also suggesting that the S&P is going to reverse. Look at the Bollinger Band here. We're resting right on the 20-period moving average, getting a doji. We'll be watching, does it break, or do we bounce and go back up and fill the gap? A topping tail on the 10-year Treasury note yield, and we got a hollow red candlestick here on TLT. So could see a rebound, and if we do, we could see a rebound to try to fill that gap with the S&P 500 pulling off ahead of Powell, so we could try to rally with him. And if I just bring up that 10-year yield up one more time, and just bring it up closer, you can see the topping tail. Got a black candlestick with the real body, the form of a shooting star here, but you got this gap, so we'll be watching that. If we go to fill the gap on the 10-year, then the S&P can try to fill its gap. If this stays above this breakout area, then doji on the S&P could be a continuation. Could be a continuation or a reversal to give us a bounce. The thing I'm watching here, though, is you see the green line right here? That's the 50. You see the black line? That's the 200. The 50 is right below the 200. And I'm watching to see if we get a golden cross. We already have it on the dollar. And we've had the breakout and back test of the trend line here. And it's a higher low and a higher high. So we now have a reversal, but we could pull back and fill the gap, drop back below this area. So that's what I'll be watching on the 10-year. And if we pull back, based on Powell, since we are selling off ahead of Powell, it's possible we try to rally with Powell with the S&P. 10-year getting that hollow red candlestick buys us a little bit more time. We'll be watching the gap fill. And then the question becomes, does the S&P move to a new high, or does it get a lower high? Should we go back and try to fill that gap? And I just want to continue to point this out that the dollar is trying to start the month off here, taking out the 20-month moving average. Last time we did that, the market topped. Keep that in mind. Showing you the daily chart. We got a black candlestick that in a second. This is a weekly. We tried to clear this area here, but we're kind of turning down off of it. Again, going to be watching to see if we kind of back test now. Breakout. The 10-year has broken the downtrend, and this week we got the breakout here on the dollar. This is bad for the stock market. This is bad for Bitcoin and cryptocurrency. So if we buy a little time here and don't break out this week but pull back and consolidate and go back up, try to fill the gap or even test the highs, rising resistance, if we can move to a new high, we'll be watching to see if we can rally. Do we get a lower high or not? But if we do try to rally, the selling could resume either with the jobs report or one next week with the CPI data, which again will be 1 week from tomorrow. Both the dollar and the 10-year yield attempting to clear this area overhead resistance after breaking their downward trend lines, telling us that the market is for reversal. You know the divergences I keep talking about in the daily time frame? Telling us that the big institutional guys are selling into the rally. The divergences are telling us where they're forming multiple point divergences, meaning we're about to get a reversal. Multiple point divergences usually lead to a reversal rather than a correction. Dollars attempting to break out above overhead resistance, but today it got a black candlestick and again gave back the gains. It turned higher and then it turned back down, like the topping tail, what we saw on the 10-year Treasury note yield. So again, we could see a pullback. So we'll be watching the gap here on the S&P with the doji, and then we'll be watching high right here. Now remember, the S&P last week moved 3 points above the previous peak. Okay, it moved slightly higher, but the Nasdaq and the Dow did not. Again, if we do attempt to rally with Powell, we'll be watching the gap fill. We'll be watching the last minor high. We do have a black candlestick. We do have here on the dollar a similar pattern to that of the 10-year Treasury note yield. Both have a negative correlation with the market. Often than not, there are periods of decoupling. Seeing them both already bottom, the dollar and the 10-year often bottom before the S&P tops. The VIX was up 7% today. The S&P got that doji there right on the trend line. But again, while we had a rally on the VIX, we were up over 13%. We only closed up 7%. Then we turned off of the 200-period moving average. So again, we still have the gap from yesterday. I talked about that gap. Watching the gap on the 10-year. From today, we'll be watching this gap here. We've now had on the VIX, and if the VIX moves to fill the gap, S&P can try to fill its gap, and they'll be watching. What happens once we fill the gap? Do we get a lower high on the S&P or not? If we are going to get a reversal, the S&P needs to drop below the 200-period moving average on the hourly chart and then remain below it. But we are seeing multiple points of divergences completing here. So again, we will be watching to see if that eventually leads to a reversal. So do we sell off further with Powell, get a rebound and sell off with Powell? We just rebound with Powell and buy more time. We'll be watching our divergences closely. The S&P was down about 38 points today, down almost 0.75%. We're becoming oversold again here in the 60-minute time frame. Could remain oversold for an extended period of time if we start to break down. But we have S&P hitting the support and resistance line again. And again, when we've hit this recently, or come close to it, we bounced. Here we bounced. Here we bounced, came close to it. Here we touched it and bounced. And here we touched it and we're trying to bounce. So do we break the support and resistance line? It starts becoming resistance. Or do we bounce and try to go back and fill the gap? I'll be watching if we try to recycle back up, try to fill that gap immediately, or do we have to go lower first before we get any kind of bounce and maybe taking this level out. I've drawn a parallel boundary to this trend line right here. This is not the same trend line I talked about in the daily time frame. It's just a parallel boundary to these highs here in the 60-minute time frame with this low. So just something I'm paying attention to. The support and resistance line, this little orange line right here, it has acted as support, and this trend line has acted as resistance. So we'll be watching do we break down below this level, hold below it, or do we bounce and go try to fill the gap? And if so, does this high hold? If it doesn't, then I'll be watching this trend line once again. One thing to notice here real fast is that we had that resistance zone, broke up through it with the FOMC meeting in Powell, and then we gapped higher and peaked the next day there, came back down and moved 3 points above that level. Got a possible miniature double top here, but we're hitting the support level. The support level is where we're finding the support along with the support and resistance line. So if we get traction here, again, we'll be watching the gap. Do we have a double top, or do we try to exceed these levels? And if not, if you can't fill the gap, then you break this level, break some of the trend lines there in the daily time frame I've been talking about in this video. And just real fast, I want to go back to this 20-period moving average. I keep talking about it. Hit it today. Talk about it more in the video here. Over here, when we were going sideways, we breached it, but then we got back above it. And here we bounced off of it, towards it, and bounced off of it. We are just right above that level right now. So do we break it, or do we bounce off of it? Break the 10 and the 20 and stay below them if we're going to see a reversal. Now, again, the S&P did form a divergence on the RSI in the 60-minute time frame. The Nasdaq got a lower high, so did the Dow. We'll be watching the gap here to see what happens. And again, does this high hold, or do we form another reference point of a divergence? We'll be watching, do we rally with Powell, or do we sell off with Powell? Do we rally up ahead of Powell and then sell off with Powell? Which is it? Do we get a gap fill and then turn, or do we get a bigger rally, get a sell-off or a rally with Powell? So far, Friday we had a off on Monday and Tuesday based on his comments that has done to the 10-year Treasury note yield. Again, I believe the Fed is going to end up pushing the cuts into the latter half of the year. I think that June cut is probably going to get canceled, as I've been saying. Now, again, last week we went higher on the S&P. We did not go higher on the Nasdaq. Monday, we tried to rally back up, and it failed, and we sold off, formed a bullish falling wedge, and then we formed a bear flag. I talked about this in yesterday's update. The bear flag, I told you to be watching it. We gapped lower. The 50 remained below 200 after late yesterday, and then again gapped lower, attempted to try to bottom, get back above the 50 period, and we moved above gap resistance here, rallying the lows for the balance of the session. Now, the Dow put in a lower low. The S&P got a higher low here. So again, we'll be watching with Powell, or tomorrow at some point, do we take out these lows, or do we attempt now to go and try to fill the gap up here, here at 52, the 52.43, 43 area, 52.43. We try to rally, got to get back above that 200 period moving average. Or is it not done and we go back down here? But you did get above the 50. You got the here in the 5-minute time frame above the MACD in a positive territory above the zero line there. See if we try to go back and fill the gap. Now, if the topping tail on the 10-year, this is a short-term top, and we start to move back to fill the gap on it and try to fill the gap we saw happen on the VIX. Or on Monday, we'll be watching. Does the S&P come back and try to fill the gap? And if so, put in a lower high, does this high hold over here at that 52.65 area? Now, if we sell off ahead of Powell, we still might try to form a divergence here on the minute chart and even the 5-minute. Again, S&P did not form a divergence here. Got a higher low, so we still may see that happen. Then there's a possibility of a 5-leg push lower, just something to consider and ponder. Elliott wave of speculation, so keep that in mind. I'm always looking for patterns of 3s and 5s. Currently here, this looks more like a 3 so far, so we'll see if we get a 5 out of it, but watching, we make an immediate attempt to fill that gap or not, or got to go back and make a lower low first. This formation right here that you see right here, the gap lower, and then the push back up, the doji on the daily chart. Now, I've been watching two trend lines, and the first trend line is this one back over here, which we've broken it. We've had other trend lines where we've broken them, and then it didn't get confirmation on the fall through. We broke it, but it never got confirmed and the fall through. And then we had this one here, and it broke down. There was no confirmation, and we turned back up. And we kept going up and hammering up against this trend line right here. And again, we still have a rising wedge pattern, but we've broken the trend line a couple times, and now I have the trend line drawn from here, from this low right here. And we did slightly breach that today, but I'm also watching this blue trend line right here. And again, look at this trend line right here. Again, we hit it right there, we hit it right there, and here we are, and we closed right on that blue trend line. So again, if we broken the first trend line I spoke about, the rising wedge, the lower boundary of the rising wedge, we've got to get confirmation and a follow through. We've got to get a close. It has to be a continuation down. But if it's a candlestick like right here with this kind of a doji looking candlestick here, we pop back up to fill the gap, or back over here where we pop back up, don't get a downward move, then again, we're going to move back to fill that gap. So again, we'll be watching. Do we get a push down? We just making a move to try to rally to fill that gap. I'll be watching futures overnight to see what happens. But if we move to fill this gap, I want to be watching this previous peak, because we do have this little miniature double top on the 16-minute chart. On the intraday charts, you have this little tiny miniature double top right here. So we'll be watching the gap fill. We'll be watching, do we get back above the trend line? Do we bounce off the blue trend line right here? Or do we get the breakdown? So we'll be watching to see how that unfolds. Fed Chair Powell speaking tomorrow. Just bring it up close. You can see what's going on. Again, we're bouncing off the blue trend line, but we slightly breached this one right here, which, you know, really only has the one touch here, really. Exclude the shadow, the touch here, and the touch here for two touches. So again, we'll be watching the doji, but again, I want to continue to draw your attention to this upper boundary. So if we go back, fill the gap, try to challenge the high, then we'll be watching this upper boundary again. Since over here, we continue to touch this trend line, and we continue to get reactions off of it. Now again, let me say this, shot at doing it right here. Last week's short trading week, again, we didn't reach it. Sold off on Monday and gap lower today. So again, we'll be watching that trend line. Should we try to exceed this level? I told you we keep playing ping pong with the trend lines. Really now, more the blue trend line here, the blue trend line, and this trend line right here. Now the Nasdaq did break this trend line, but again, this trend line is just from these lows. We've already had it here from, let me just zoom out so you can see that. We've already had this trend line break and try to back test really, and then we drop back below it. And now this trend line, I've just drawn another trend line here. But it's interesting, the S&P and the Nasdaq and the Dow, again, they have these lower boundaries, and that's kind of where we found support right there from the more recent lows since January. Both the Nasdaq and S&P are doing that, and the Dow is doing it as well. So again, do we bounce off of these trend lines from these last few lows here? It's January. Nasdaq daily chart. And if I just remove the other trend lines, you can kind of see what I'm looking at here. This trend line right here, and it's parallel to the upper boundary. And again, we never did reach that level. Again, we'll be watching the gaps. We did have a doji yesterday and gave us a sell-off down to this trend line on Nasdaq. And let me just show you the Dow, because it's doing the same thing. Pretty interesting. The Dow coming down, hitting that trend line as well. Again, the Dow had this trend line. It back-tested it right on the nose. And where these two trend lines intersect, that's where it reversed. And then it came down, and then it, again, got a little miniature double top. The S&P went 3 points above the previous peak. The Dow got a lower high. The Dow sold off on Monday and broke this other trend line today, but hit this one and bounced off of it. So now we have these gaps to be watching and these trend lines here that we're trying to bounce off of. So we'll be watching those levels. Well, the S&P got a higher low. The Dow got a lower low and a divergence. So again, we'll be watching. Do we attempt to fill these gaps immediately, or do we get another leg down for average? We're hitting the trend line. We're hitting the 20-period moving average on the Dow. And look, CD is now to roll over again forming the multiple diversions. So again, we'll be watching, do we come up here, try to fill the gap, get a lower high breakdown, or do we just break down immediately and back test, fill the gap at a later date, we bounce and try to go again to these upper boundaries where we continue to see sellers lurking And again, the divergences are telling us that, again, as we hit that trend line over and over, the bigs are selling into the rally. That's what the divergences are telling us. Eventually, that will lead to a reversal. Now, do we get it tomorrow and start breaking these trend lines and start getting a bigger dump and take out the 20 on here on the Dow? Or do we try to go fill those gaps? We'll be watching. I want to show you this because it's really important. Again, we get this doji on the S&P right above that 20 period. And again, if we're going to go lower, you've got to take out the 20 period. We did dip below the trend line. We did dip below the period, but we closed off that other trend line I showed you. Again, are the divergences now going to play out? Doji ends up being a continuation, and we just start seeing a big sell-off before we get any kind of rebound back up and fill this gap maybe later. We go back and try to fill it, see the 10-year yield come back down with the topping tail, see the dollar come back down with the black candlestick, see the VIX reverse off of the 200, and again, buy a little bit more time. And if we do, again, we want to be watching the gap. Do we get the lower high, or do we go up and hit this trend line once again? If we do, then the S&P is going to move towards 5,300. Whoops, wrong area there. It would move towards 5,300 if we did try to do that, and then we could turn. It's possible we have a peak in. We start seeing confirmation, breakdown, and take out our 20 period moving average here, and then remain below it. The 200 in the 60-minute time frame and remain below it. Our MACD rolling over. We've got our stochastic and turning back down here. So again, we'll be watching what becomes of the doji. Does it give us the bounce, or does it give us a continuation down, taking out the 20? We had that candle of indecision yesterday in the form of the doji, spinning top looking candlestick yesterday. We gapped lower on Nasdaq today, but we get a hollow red candlestick and possibly a bottoming tail. We did close below the 20. We'll be watching the gap. Again, while S&P moved to a new high late last week, the Nasdaq did not. They diverge from one another, and if we rally back up, just fill the gap, and that's it. We did get that black candlestick back there in late March. That was the day after the Fed meeting. So far, that high is holding. I talked about a possible post-Fed sell-off where Nasdaq did peak the very next day, at least so far, and S&P went higher as we got a lower high here. We'll be watching these gaps, and we'll be watching, does Nasdaq stop making new highs? The S&P. Divergences, again, notice that, and we've been going sideways on the Nasdaq for now 5.5 weeks. Divergences are telling us that the institutions are selling into the rally. That's what divergences are telling us. And we have the divergences in the daily, the weekly, and the monthly time frame. Time frame divergences are telling us that we're going to get a bigger reversal. I think will usher in a bear market. Again, Nasdaq trying to bounce off this trend line right here. Again, if it can get a bounce, we'll be looking at the gap. If it gets a bigger bounce, we'll be looking at this high over here. See that? Then you've got, again, upper boundary of the channel line directly above that. We didn't quite reach it with this previous peak. So again, we'll be watching these levels, but you got to take out this trend line really. Remain below the 20 period. We are below the 20 period, but you're getting a hollow red candlestick. So you got to take out that 20, remain below it on the S&P and Nasdaq if we're going to get a reversal. Pring parameter, again, continues to be rolling over here, suggesting that we're going to see a big sell-off, and you do have this large divergence from over here with the July peak. I cut it off there a little bit, but I just zoom out here. You can see this large divergence with Pring parameter and the Nasdaq. And again, we have those divergences in the weekly time frame. Again, Nasdaq is breaking the trend line. Again, from the last minor lows there, it had already broken one. But again, we're watching the divergences. We have divergences in the most recent price action on things like the stochastic and the rate of change. Watching these larger divergences. And again, if we do end up pushing higher on Nasdaq, you got this upper boundary of the channel that I was talking about. If we go back and try to fill the gap and try to rally higher, that trend line comes into play. We didn't quite reach it here. We don't fill the gap and start to break down, or fill the gap and then break down, one or the other. Then again, we'll be watching. Do we start seeing these divergences begin to play out here in the weekly time frame? And you're getting rollovers on many of them now. Last week, more of them this week. Some are still yet to roll over. But again, these divergences have called the tops, they've called the bottom. There in October 2022, it's likely they're going to mark this as a top. These divergences here in the weekly time frame for the Nasdaq, just all over the place. And again, these divergences are suggesting again that because we've been going sideways for 5.5 weeks now, that institutions are selling overvalued tech, and that's why we're stalling out here for the last 5.5 weeks on Nasdaq. Possible we try to reach this level, but no requirement to do so, and then we'll be watching the gap on Nasdaq. The S&P 500.